If you are not getting educated about current market conditions, whether you're in finance, you're in mortgages, you're in title, insurance, or obviously a real estate agent, you're doing yourself and your client base a disservice. This is the Knowledge Brokers Podcast. I'm Tom Toole. He's Byron Lazine. And there is one thing to lead off with this week, Byron. The rising mortgage rates we are seeing getting close to 7% as of this morning. It's a big talking point. There's a lot to unpack. Tell me what you think.
Yeah, Tom, it's actually the volatility that exists right now is the reason why we said, let's go, and all these conversations that you and I always have, just kind of strategizing, looking at the market, behind the scenes. Let's go launch this podcast, Knowledge Brokers Podcast, because if you're not keeping up on it, almost every day right now, certainly every other day, you've got to stay up on it. It changes so fast. Just 2 weeks ago, we were at 5.99. By the time we end this podcast, we could be at 7%. Like that's how close it is. We're just touching up on 7% mortgage interest rates. And it is the only thing to talk about this week. It's the biggest impact on housing. It's the biggest impact on everybody's real estate business. Now, we're in a seasonal time where there's demand that buyers are like, I want to go buy a house. It's the new year. It was kind of a weird thing. It was like a light switch January 1. It is, from mid-January to mid-May, you always get an uptick in mortgage applications. It's the time of year people are out there shopping and all of that. But it was like, okay, we're buying anyways. And that was even before the rates came down. And the minute that demand got really strong, albeit 43% lower than last year, so not nearly the demand, nationwide that we had last year. But when it got strong in markets, and then that jobs report came out, boom, you just saw mortgage, the 10-year and the 30-year fix go shooting up, and we're going to hit 7. I think here's what I believe. This is my prediction, Tom.
Let's get out the crystal ball.
Brokers. I'm going to get out the crystal ball here for a second, just based off of the trends right now. When we do Knowledge Brokers next week, I think we'll have had a day where we had a 7 handle, or we'll be sitting at a 7 handle. And we know what happened last year when we had 7%. Now, that was in a season, that was the end of the year. That was in a long, 6-month run of mortgage rates, doubling and just going up month over month over month. People got worn down. People traditionally in the fall will slow down. I'll do it after the holidays. There's a resistance right now because we're in that seasonal time period where buyers are buying homes. So we'll see what happens this time when we hit 7%. And I do believe there are going to be buyers that are just like, I give up. I'm buying either way because I need to get out of this apartment. I've got a growing family. Whatever my situation is, I'm buying now. I'm not waiting another year. There is pent-up demand. Zillow had their earnings report this week. Redfin had their earnings report. We're going to talk about, I think, Redfin a little bit later and what Glen Kelman said on CNBC. There is pent-up demand on these sites. It's obvious that the traffic indicates there are people who have been trying to buy the last 2 years who are still unable to buy, and eventually they're going to throw the towel in and just buy regardless of this rate. It leads me to believe, Tom, that it's going to be a rocky road throughout 2023 if you're a real estate agent, and you need to take that into consideration in your business. You need to recognize the seasonal opportunity you have in front of you and not get confused that this is a moment of opportunity and not the 2023 story. The story is untold. We're still in the first or second inning here.
Yeah, that's a great point, Byron. And there's a couple things I want to unpack here because I've been studying this as well. So midweek, we saw a report come out on CNBC that mortgage demand plummeted 7.7%, right? That usually doesn't happen this time of year. It goes the other way. Secondly, in the Glen Kelman interview yesterday on CNBC, he came out and said, well, we've got half the inventory we had from 2016 to 2019. So that's what's fueling a lot of this demand, is that typically in downturns where we see rates rise, inventory will also rise. And that's just not happening right now because of these 3 and 4% handles that folks are locked in at in their current homes. So that's one of the biggest drivers here, is that this game the Fed has been playing of moving rates down aggressively in 2020 and coming back up is actually causing more of the problems than not. And then while all this is going on, we're seeing really strong economic reports. The economy is stronger than people anticipated. So we're in this
Are we ever?
we're in this weird spot. I mean, they talked about the jobs report that we referenced last week. They said it's almost too good to be true. And so we have this great employment data. People can't buy these properties because inventory is not there. And I agree with you. We are going to see a 7 in rates. They're coming in at 6.75 as of this morning. It's going to go to 7, and the 10-year has really indicated that in the lead indicator status. And on top of all this, in the Glen Kelman interview, and he looks at Redfin traffic data, and Redfin's got a
And
great
they have a lot of it.
yeah,
44 million unique website users a month. They have a lot.
great website. People go there. I mean, it's one of the best real estate websites that are out there. They're seeing demand down on their website, and that is an absolute lead indicator.
In Q4,
Yes.
we don't know what it
Yes,
looks
great
like
point.
in
Great point.
January
I'm
and
glad you
February. I would
clarified that.
imagine it's up right now. Actually, I think it is up. Let me see if I have that in front of me because I did see. I think it was. It was definitely down year over year. 44 million unique monthly users. That's for the year of 2022, which is down a decrease of 2%. That makes sense last year, right? We
Mhm.
saw certainly in the second half. Okay, I don't know what it is January and February, but I'd imagine it's up a little bit.
I mean, in the interview, he said he was seeing that it was down on the site. I'm imagining he's looking at real time.
Okay, so this is on
This is
that
in the
CNBC
interview,
interview
yeah.
that you
So
watched.
yeah, this
Okay,
came out yesterday. So
okay, there you go.
they haven't released the data. He's looking at it every day like a good CEO should. And then on top of that, and Bobby can put this chart up in for everyone here. This comes from our friends at Keeping Current Matters, and I find this very interesting. Is they chart 4 categories: weak buyer demand, limited buyer demand, good buyer demand, strong buyer demand. So take that for what it is. And they have this chart here that they've been charting where rates were going. Once you get above 6.5%, that looks to be the threshold where buyer demand goes from good to limited, which is the territory we're in right now. And
Hmm.
when you get to 7, I don't care what anyone says, that 6.99 to 7 has an effect. And 7
Yep.
is where we saw the biggest slowdown last year, October, November. I mean, when rates hit 7, it was a problem. So and people did kind of slow down. So we'll see what happens. And I'm clear this is why a lot of economists like Logan Motoshami at Housing Wire are saying the Fed needs to slow down here and stop raising rates because they come out with another basis point increase at the next meeting. Well, what's that going to do? Is that going to push rates even higher? I mean, that could really cripple demand here for a lot of folks. And maybe that's what they're trying to do based on all the rhetoric coming out of the Fed.
Yeah, the Fed certainly could say, "Oh, we saw those 2 weeks where every agent was posting about multiple offers and
Yeah.
bidding wars in the beginning of the year. Let's see what happens in the spring market if during the buying season we jack this thing up over 7%. We saw what happened in October, November.
Hmm.
Let's see what happens in the spring
Hmm.
if we're at a 7 handle. If a seller were to say right now, well, shouldn't I just wait till the mortgage rate comes down? What would you say to them? Because I know what I'd say to them. I know what it looks like right now with the data that I'm seeing.
Well, I would start off with, hey, can I tell you why that makes me nervous? That would be literally the first thing I would say to them. And share with them, hey, we don't see any indication the Fed's letting up on their rate hikes. And they don't set the mortgage rates. Obviously, we've seen the market respond in a certain way. And the best time for you to have your home on the market, Mr. and Mrs. Seller, is when there's no competition or competition is limited. And we're going to see a seasonal uptick in inventory. Historically, it happens every single year except 2020 during the pandemic. So
Of course.
here's your opportunity to capitalize on inventory despite mortgage rates. Do you want to gamble with your home's equity? And, I bet you're a lot like me and you don't want to take that kind of gamble. So let's do the right thing and get your home on the market now. And everyone should write that down and record that because that's how to have that conversation every single time.
And also, here's the data. There's no indication that we're going to get back down to 599 anytime
Nope.
soon. To your point, the data is clear. We should have more inventory. We've been on a declining
Hmm.
inventory, but if you look at just history, we should have more inventory in March than less. Okay.
Yep.
And what a 7% interest rate and more inventory is going to do is put downward pressure on prices.
Mm-hmm.
So to me, your opportunity for the highest price is Q1 of 2023, not Q4 of 2023. This is also when you get the most price appreciation,
Mm-hmm.
is during these months from January to May, where mortgage applications are typically on the rise. I know last week they were on the decline, but overall on the year they're up from where we were in November and December. And you're going to have a lot of pressure on price. I've said a lot about the median markets, the median price points in a lot of markets, and there's still a lot of markets where inventory is at the all-time low,
Mm-hmm.
and there's going to be a lot of pockets where prices are flat or maybe even up in this spring season. But when we get into quarter 4 of this year, across the board, every single market in at least certain price points will have felt downward pressure on pricing. Doesn't mean homes are going to be more affordable for every buyer, because we'll see where the interest rate, falls into place. But for the sellers, your opportunity to get the most money is now, not later in 2023.
This is something a lot of agents really need to pay attention to, Byron. I saw this from our friend Matt Curtis down in Alabama, that 70% of real estate agents have not sold a home in a down market. 70%. So,
Wow.
and I don't know where you got the
Let
data.
us know, by the way, in the comments. This isn't a shame game or something like that. Just let us know. Hey, have you ever sold in a down market? A down market would be 2012
Or
or
earlier. Yes.
11.
Yes.
You
That's
know,
exactly it.
it'd be about 10 years ago. You could say 2013 in comparison to the last 10 years, maybe. But by 2013, things were starting to move the other direction. Did you sell in a down market? Let us know.
And the reason I say that is because there's a,
Or if you haven't,
yeah,
let us know
if you
too. Go
haven't,
ahead, Tom.
it's okay. I think it's actually more important to acknowledge, hey, I don't know the play to run here to best help my clients. So I need to get educated and I need to get some knowledge to be able to guide them through this marketplace, because there's going to be people that transact. You and I were through that 2008 to 2012 downturn. We know what it was like, and it's a challenging market. And people may say, well, 2020 was challenging. That's a hustle market. That's very different. So you've got to have tough conversations. You've got to know your stuff, because it's not easy sitting there telling a seller, hey, the price of your home is going down from what you think. Here's the data. And let's get really serious about what it's going to take to get you to where you want to go next. That's the hardest conversation in real estate, is about pricing and adjusting prices and home selling for less than what people think. So if you don't know those plays, I think it's even better that you say, hey, I don't know. I don't know what I don't know. So you can learn it, get the knowledge, and be able to execute and implement it. And that's going to be a big separator. This is why so many agents are struggling right now. I talk to a lot of folks that are a year, 2 year in the business just here in our local market, and they don't know what to do, because it's not, hey, I'm ready to go buy this home. I already saw it. Here's my pre-approval. And it's becoming a problem. So if I'm one of those agents, or I'm a seller or a buyer, I'm asking those questions. What's your play? How do you understand? What do you understand about this market? And you've really got to interview agents again on the consumer side, because it's going to be more important than ever to have a knowledge broker in your corner.
Yeah, if I'm a seller right now, I'm moving with urgency.
Mm-hmm.
If I'm a buyer, I'm practicing some level of
Mm-hmm.
patience. I'm absorbing as much knowledge as I possibly can. So buyer agents understand that. Listen, there's tremendous opportunity in these challenging markets like you just mentioned, Tom. It's about a wider pipeline if you're
Mm-hmm.
in the business of serving people in your community. How do I really widen the pipeline? How do I talk to more people and at once, right? How do I disseminate information, easily understandable information about what's going on in our local market, out to the buyers that I'm working with? How do I get that out there quickly and into their fingertips? These are really important. I'd be looking at my MLS data every single day and getting that out there. Okay, I've got 10 buyers in this price range. I've got 5 over here in this price range. I've got 2 graphs. Boom, I'm blasting them out to all 15 of those buyers. I'm making sure that they understand where the opportunities are, because there's going to be opportunities. We know that in that 2009 to 2012 range, there was a lot of investors There was a lot of agents working with investors. There was a lot of agents that were creating relationships that have gotten them 10, 20, 30 transactions from that time till now because they built the relationships in those opportune times. You know what else is interesting? This is going to be a unique opportunity to build a relationship with home builders right now. Home builder sentiment's up, and I know we're going to react to a CNBC video that you popped
Mm-hmm.
into our sheet
I
here
find this one
for
fascinating, so I really wanted to bring it to the table.
yeah. So I think there's a huge opportunity with builders, and their home builder sentiment is up as well as the mortgage rates, like we just talked about. But let's watch this video and then react to it.
Huge home builder sentiment reading today. It just improved by the most in a decade. But breaking news on mortgage rates could throw some of a wrench in that. Let's get to Diana Olick. Diana?
Well, Kelly, mortgage rates are on the move higher again, especially today, and I'll get to that in a second. But first, the home builders are largely positive on the day thanks to a strong report on builder sentiment, which rose for the second straight month, up 7 points on the NAHB's index to 42 in February. Anything below 50 is still considered negative, but it had been as low as 31 just 2 months ago. This is the highest level since September and the biggest monthly increase in sentiment since June of 2013. Of course, sentiment was at 81 in February of last year when mortgage rates were much lower, but rates are now lower than they were last fall, at least. Of the index's 3 components, everything was up, but the biggest one was sales expectations in the next 6 months, up 11 points to 48, which is just edging up toward that positive territory. It is all about mortgage rates right now, which came off their highs of last October when the 30-year fix jumped over 7%. Came down after that sharply in January, hitting 6%. But in the last 2 weeks, it's up again, especially in the last 2 days with the CPI and retail sales. And in fact, a 13 basis point jump today to, dare I say, 6.75%. That hit mortgage demand last week. Refis dropped sharply as expected, and even demand from home buyers dropped a bit, despite other signs that buyer demand is rising in an early start to the historically busy spring market. Tomorrow, of course, we'll get the January read on housing starts and see if builders are putting some of this new optimism to work. But with rising rates, Kelly?
Sure. It was just, we were talking about with Andy Walden yesterday, almost spooky. And you have to imagine some buyers going in with the mentality of rates being off their highs and all of a sudden looking at it and going like, oh my gosh, how do we get back up here?
Yeah, I mean, it's really surprising how much in the last week they've come back up. And you had that sort of emotional 7%. And folks I spoke to at an open house over the weekend said, well, we're way down off those highs.
Right.
Well, guess what? We're inching back up again toward them.
Yeah, we're not.
Yeah, we got to go back to the open houses now this weekend. How sensitive is it? Thank you, Diana, very much. Our Diana Olick.
This is what I'm talking about. Where people, I mentioned this in the hot sheet this morning, where some agents are like, oh, there's headlines saying rates are easing. You can't just look at headlines because a lot of it's lagging data.
Mm-hmm.
Just this past weekend, she said she went to this open house this past weekend, and that was February, whatever, 10th. You knew this past weekend,
The 12th,
okay,
11th and 12th.
The 11th and the 12th of February, you knew on the 11th and 12th, if you were keeping an eye on this every single day, that mortgage rates weren't in a great spot. They were at 6.5.
Mm-hmm.
Okay, just a week before that, they were at 5.99. So when you're regurgitating this type of information, especially to somebody who an open house, somebody walks in an open house, they're not watching it very closely.
They're
just
very
starting
top
the
of the
process.
funnel. They're very top of the funnel. Totally agree.
They walk in, they meet an agent who's saying, hey, mortgage rates have eased up in a big way, and then they go to lock in this week and it's like, well, we're at 6.7. What are you talking about? You've got to have really accurate information. And so that's not surprising that there's, agents out there that are lacking the knowledge that are day to day because they're getting monthly data, they're headline reading.
Well, what I found fascinating, sorry, I didn't mean to cut you off, Byron. What I found fascinating there is home builder sentiment's up in spite of all of this. And the only reason it's up is because of inventory. I've seen more buyers go to new construction because, one, there's nothing else out there. The builders have some sort of inventory. And then a lot of these builders, I mean, you're 6, 8, 10 months out. So they lock you in now, which I think gives people some certainty if you use their in-house lender. It's shocking to me that this is the biggest jump we've seen since 2013 in terms of the increase in the sentiment there. given what's going on in rates, because they're going to be paying a premium for those homes anyway. The better buy is always the gently used property, the resale. It's like buying a new car. So I don't know what some of these builders are thinking, to be very honest with you. I wouldn't.
It's bad data.
Yeah.
It's lagging. This sentiment isn't up to the minute of what just happened the last couple. That housing start she referenced in that video, the housing start data that did come out this week. It was housing starts were supposed to be down about 2.5%. They were down 4.5%. So their sentiment might be positive on their inventory that's coming on the market, I guess, to your point, because there is no inventory and they're probably seeing more foot traffic. I think where the sentiment is open house foot traffic is way up from where it was in quarter four. And so there's a little bit of a pop there, but housing starts are down 4.5%. That was a big number. We're not going to get future, and this is going to be this decade long issue of inventory. We're going to continue to compound that because they're going to be very cautious and conservative right now. Landowners haven't realized that they need to take the hit to help builders. They don't want to take the hits. If they want to sit there and pay taxes on land, then, maybe someday they'll make up that difference. But listen, I think this is not a really good indicator of how builders actually feel. And listen, it is under 50%, under 50.
It's still below where they want it to be.
Builders don't feel great.
They're like, oh, we're close. And I'm like, well, close isn't going to cut it right now. And,
yeah,
new construction doesn't do anything in my market in the greater Philadelphia area. I mean, you're going very far west, or you're going, into New Jersey. There's just not a lot of that. So, I think this is a great example of these people are on CNBC, right? They know their financial news, and this is what they're putting out there. And the reason why I wanted to share this is that it really demonstrates how important it is to understand what's going on in the market. I wrote down 4 things I'm clear that every agent should be looking at on a daily basis or maybe multiple times a day. You talked about the MLS. I'd be opening your MLS hot sheet 3 to 4 times a day. Put it in your calendar. That's number 1. See what's coming to the market, because there's still going to be that ferocious demand if you got a buyer. Second,
how many times do you open Instagram? So it's possible to open 3-4 times a day.
Put it in your calendar, right? It's not difficult. Mortgage rates, you got to be checking on them at least once a day, if not more. That would be the second thing. Third, I'd be looking at the financial data coming out and what the 10-year T-bill's doing, because that's going to be an indicator. Because people ask you, I mean, Byron, like, hey, should we lock or should we wait? Right? That happens all the time when you got folks that are under contract. And then on top of all that, the last thing I'd be looking at, and this is maybe a weekly thing, is I'd be reading the Housing Wire weekly tracker, because that gives you real-time data, what pending sales are doing, what mortgage applications are doing, what inventory is doing, and what the 10-year T-bill is doing. And that's the bare minimum that people should be looking at. But you got to be in your MLS every day, multiple times a day. You got to know what's happening with rates. Because, I mean, these people are reporters, and they're just putting out bad data. I mean, if we did that with a client, we would get fired.
Oh, for sure. And if you don't want the paywall, just watch or listen to the hot sheet every single day, because I talk about the 10-year. I talk about that housing market tracker. I talk about the 30-year fix every single day. So you can grab that in a condensed way. And we do a daily download on that show too, where I just give you all of the sources and charts in a 24-hour period every single Monday through Friday, because this is how often things are changing right now. This is what the really knowledgeable agents are doing, is they're just staying really up on it so that they can go deep in these conversations, because there are day-to-day swings. Finishing off on what's happening with builders right now, Tom, like you mentioned earlier in the pod, where you were talking about this challenging market brings out so much opportunity. There's real opportunity with builders because they're inside sales. If they've got an inside sales agent, in-house agent, whatever you want to call it.
Most do.
That agent just had the easiest job in the world the last couple of years of foot traffic just pouring in to the model homes. They could just sit there behind the desk, eat a Snickers bar, and wait for somebody to slap a contract in front of them. Really, the builders could have done what, you see all the gas stations and these places doing now, or not gas, supermarkets rather, where they have checkout lines unattended. Okay.
Those things are god awful, by the way. They're horrible.
Literally, some of the builders could have done that. They could have put an iPad out, fill out an offer, and just that's how crazy it was the last couple of years. today the builders are looking at their in-house sales agent and saying, what are you doing on top of, just sitting here to get traffic in the door? How are you helping? And so if you're an outside agent in a local market, going to those builders with, here are the things I can do above and beyond Zillow, Redfin, and MLS for you.
Mm-hmm.
Here's how I can extend more eyeballs onto your development right now. Here's what I'm doing on YouTube. Here's what I'm doing on Instagram. Here's how I can benefit you on a weekly plan. Let's do a 60-day test on this. Let's see if I can increase traffic onto your product.
Mm-hmm.
Okay, go create those relationships. There's an opportunity. They're at least going to listen. They wouldn't listen 2 years ago because why would they? They're getting offers thrown at them. They're going to listen today.
Yeah, there's a great anecdote I'll give you here, and I'll name the builder. Ryan Holmes had stopped cooperating with real estate agents in 2020 to 2022, or offering a $500 commission for people. I don't know if we're allowed to talk about this, but I'm dropping it out there. I mean, they just basically said, we don't care about the co-op agents anymore. We're going to cut that cost because it's easy. And they were building in an area that's not too far from our office. I've also worked new construction. And more importantly, my father made a living off of it. And the builders, they've got sales quotas they have to hit for their banks, for their lenders. So
yes,
not only is there an opportunity for agents to approach them and see if they can increase traffic, for the buyers that are out there, I'd be going in, and my experience has been this. You never get them to adjust the base price, but you can get incentives. You can get upgrades. They don't want to bring the base price down. You walk in there and say, hey, if I move ahead, I want the redone kitchen. I want credit for options or whatever that is. That's where the negotiation happens. And most real estate agents don't know this. They just go in, they say, oh, this is the builder's price, sign here. And that's probably why Ryan Holmes cut out agents or paid them $500 on a $600,000, $700,000 home and not even bring some of their developments to the MLS. So I'm clear that there's an opportunity for buyers there to, if you're going to negotiate, go in, hey, I want incentives, I want options. And end of March is coming up here. You know when the quotas hit, Byron? The end of the quarter. So I'd be going in and negotiating like a jerk. And I really clean that up there for the pod here to make sure. I mean,
I was just going to say that end of quarter is when you can actually get something done, because the bank is holding them to those numbers. The bank's looking at spreadsheets, not, what are people saying at the open house? Banks don't give a crap what people are saying at the open house.
The banks want their money.
They care about that quarterly number of units moved.
Mm-hmm.
Okay. Closed, under contract. So getting something under contract in the last week of March, as opposed to the first week of April, does mean something to some builders. And there is probably a little bit more flexibility. There's that old saying, the last week or the last day of the month for a car dealer, right? Because they're looking at month over month data and figures, right? And so they're going to potentially be a little bit more flexible than they will, March 31st than on April 1st in this scenario. You're not going to go steal a property just because they need to move it, but you're going to be able to get them to give you some type of incentive where it might make the deal come together.
A $10,000, $20,000 concession, I mean, is not unheard of here. I learned this, it was in 2009. So in a tough market, right? We went in with a client and she was brutal with these builders. And it was Memorial Day weekend, right at the end of the second quarter, right? End of May. And they said, well, if we get this thing signed by Tuesday, here's the deal. If we don't sign it by Tuesday, the price is going up. Verbatim from a large national builder. So that's the bank is who they have to answer to. Like the agent has to answer to the builder's got to answer to the bank. And that's the only way they get down to phase 2, phase 3, phase 4 of these developments.
You sent me that Glen Kelman, CEO of Redfin, video. We're not going to watch that one. That was a 5-minute.
It's too long.
Interview on CNBC, but was talking a lot about inventory and for all the things that are happening that are going against us right now, and I'm talking about downward pressure on price. I'm not talking about a plummet, and that's a lot to do with what he's talking about here, where we're still at half of the inventory that we were of 2016 through 2019. So there is it's not a bottomless pit when I say downward pressure on price. There are levels to this. We're going to have pressure. We're not going to have a plummet. What were your big takeaways from the Redfin CEO this week on CNBC?
So he had a couple of talking points here. One, he talked about inventory being half of where it was 16 to 19. We've hit on that. And obviously, inventory normally shoots up this time of year. We've talked a little bit about that. The challenge he sees is that there's a whole generation that might be without housing for a while, and it's millennials. I mean, we've talked about this at length, where these folks decided not to buy. The pandemic happened, then they flooded the market. And what he is fearful of is buyer paralysis, where they just don't know what to do. You mentioned throwing in the towel earlier, Byron, because they're just they're in the screw it phase. Either screw it, we're just going to buy the next home, or screw it, we're not buying anything. There's two extremes there, and it's not going either way. And that's his biggest concern, because of when these rates come up like this, there's some people, they just can't buy what they want anymore. And it's like, are we really going to buy something where we don't like it, or are we better off just paying rent and having enough space for our household and family? And that's the decision a lot of people are faced with right now. And on top of that, I mean, we talked about how we saw that like kind of pop in inventory in January, and that was a lot of because of the 5 handle on rates. So everything he's saying is consistent with what we've been talking about here. And the fear is that we're going to see some seasonal demand right now, but come Q3, come Q4, that's when real estate agents really need to have some tough conversations. So, he's seeing the same thing everybody else is, and I appreciate his perspective more so than the CNBC reporters or these agents that they're talking about, because they don't really know what the heck is going on. So, and they're mentioning like 70 people going to open houses over the weekend for brand new listings. I mean, he's seeing the same thing nationally that a lot of us are seeing locally, and that's the narrative right now.
Although they had their earnings report yesterday, Redfin, and they're just not doing that great.
Well, that has to do with, I think, their quality of agent versus what he's seeing on a market knowledge level.
Oh, but they said yesterday they have a very high quality.
Have you dealt with a Redfin agent before? I mean, I know I have.
Very. You know what else was interesting about? Not to get on a tangent on this, we'll get back to what your takeaways were. But the majority of their revenue, the largest share of the revenue in 22 was Redfin Now, which they're sunsetting. So revenue's down. They're sunsetting their biggest revenue driver, and their agent services is down as well. So I don't know. Anyways,
well, think about this though. I mean, everything we're talking about here, and I don't mind cutting you off since you just stomp all over me during the podcast anyway. So think about this. In down markets, who are the first companies to go? Discount brokers, people that don't know what they're talking about. We've seen the number of agents decline a little bit so far this year, peaked at about 1.6 million. Now it's at 1.5. So we're going to see more and more of that. I mean, how many discount brokerages have you seen come and go when the market got tough? Because I remember in 2005, they were like all over the place. And then 2008 happened. They all closed their doors. I can give you the list of names. I mean, they're just gone. These people don't even know these companies existed. And that really demonstrates the need for agents that want to have a sustainable career and want to help people navigate this market, because there will be folks who buy and sell, to understand everything we're talking about here and know the risks of buying, the positives of buying, and seeing what the best decision is. That's our job fundamentally, is be consultative, show the options, guide folks to a decision that's going to make sense for them long term.
Yeah, all of them, right? They all
throughout history, it happens over and over again.
Yeah, but I do appreciate when not to beat up on Zillow or Redfin rather too much. I do appreciate when he gets on there and just goes deep on market trends, because after Zillow and RDC, Redfin is right there with having some forward information about what is the pent-up demand look like, what's the online traffic look like, what are some of the trends, people engaging with that app. So
totally agree.
Tom, just going into this week, I think we're gonna hit 7%. Okay. The rates are moving closer to 7%. There's actually an economist from realtor.com that believes over the next few weeks we'll be at 7%. I think it could happen next week. I think by the time we're
Monday.
Here. So yeah, it could happen Monday. By the
today,
time this podcast is up, it could actually have happened. You just don't know. Okay. So If we get to 4.25 on the 10-year, we'll be at 7.25 according to Logan Motoshami. That'll be, basically back to the high level of last year. What do you do going into this week?
As an agent
Well,
or
if
as a
you're
consumer?
no, if you're an agent, if you're a builder, if you're, if you're getting your income based off of doing some real estate transactions, doing some deals, having some movement in the market. But you can't just go out there and sell. You gotta educate, because you're not going to build trust in these volatile times just going out there and hard selling people. What are you doing?
That's a great point.
What's your focus?
So I see a couple focuses. We literally just ran a training on this. You and I were talking about this morning on our accountability call. I'd be looking for listings if I'm a real estate agent right now. I'm hunting for listings. I'm getting the word out. I'm making phone calls, and I'm looking to meet people. The number one indicator for real estate agents is how many appointments do you go on. That's the lead indicator. So I'd have time blocks in my schedule of looking for listings. And if you're wondering where to do that, the best place for every real estate agent is, I'm sure you've sold a home over the past 30 days. If you haven't, then go back to your leads. Anything you've sold over the past 30 days, call that neighborhood. You are now the neighborhood expert. You've done the latest or one of the latest pieces of sales data in that particular area. Circle dialing. Byron, how many people did we get on the phone when we were making those circle
actually
dials?
link up the circle dialing event that we did. That was a 2-hour case study on how to circle dial. We made live circle dial calls.
Yes, and with the 2 hours we were on there, I spoke to 3 people with intent. One of them we followed up with this week, and we're working on an appointment. So the point is that's an easy call for any agent, because it's not that expired getting pounded. It's not the for sale by owner that's getting bombarded by everybody. It's someone calling and delivering knowledge, right? So that would be how I would search for listings. Number one, I'd be looking at any home where I can do an open house. I'd be sitting an open house next weekend because you're in the product. Invite the neighbors. I would be looking for listings. Then the second thing I'd be doing, and we ran a whole training on this on Wednesday, was value-based follow-up. Lazy follow-up does not cut it anymore. I mean, we've heard this so many times. The check-in call, just hang up the phone if you're going to check in with somebody. It's horrible. I'd be looking at the chart we shared about good buyer demand versus weak buyer demand, talking about why 2008 isn't like 2023. Deliver some value, film a quick bomb video that's less than a minute with some copy and text. You just did that thing with Chris Smith about ChatGPT. You could probably get the email copy from ChatGPT. Probably want to link that up. Send out an email and then follow up with the people and call them. Because even if rates are at 7, there are going to be folks that buy homes this year. So I'd be delivering value on what the long-term view of the market is. Send it off to them in an email. Call them and have a conversation. And think OFQs, right? So an opening, a fact, and a question. So the opening should be the same for every single real estate agent that's out there. Hey, Byron, it's Toole with Remax, following up with you as promised. I sent you an email yesterday about how 2008 and 2023 are totally different despite a lot of these clickbait headlines. Did you get a chance to take a look at it? And then stop talking and have a conversation about what's going on in the market and requalify those buyers. So I'd be spending an hour a day looking for listings, an hour a day doing that. And I'd be doing that 5 days a week with no interruptions. That's how you win in these kind of markets.
Yeah, make sure you're committed to it. The value-based follow-up is so critical. I actually just challenged Vanessa, the senior editor at BAM. I said, hey, we need to create some serious case studies. I'm going to use it for the team in Connecticut, but I'm going to get it in the hands of other teams. We'll get it and have your team use it and other teams in the industry. Let me know in the comments if you're interested in this. Case studies where when you're circle dialing, you can say, hey, we just did this study on X, and I don't know if you're interested in me sending this to you as a homeowner in the area, right? It could literally, like you're saying, value-based follow-up could be, we just put together an analysis of the neighborhood based off of the 3 transactions that happened in the last 30 days. I don't know if you're interested in me in sending this to you, but I'm happy to do that. And just be adding a ton of value right now, building up on these conversations. How many more people can you create relationships with that might be a seller now or a seller into the future? I'd be doing a lot of that value-based follow-up that Tom's talking about, the value-based circle dialing. That link that we have below is going to show you the ins and outs of how to do the basics of circle dialing. The next level is absolutely just calling people and saying, I've done this study, I've done this report, I've done this market analysis. Would you like me to send this to you? And then just listen and see which direction they go. Hey, no, I'm all set. Hey, got it. Totally understood. It sounds like you're super happy with, living where you are. Maybe you know somebody that would benefit from this information, because things have changed significantly in the last 30 days here, and you own here, you have equity here. Is there anybody interested on how this might have shifted it, right? And get that information out to more people.
Love it. I mean, that's how you do it in this market, because here's what's going to happen. And this happened on the link. So I highly watch the link below. Give us a like if you think that's something that's valuable. The people that had intent simply just told us. They're like, oh, well, it's amazing you called. I've been thinking about making, like, people know you're a real estate agent when you open it properly and you deliver value. So they're going to tell you, and it's no different than calling your database. That may be another place folks need to spend time on as well. They know you're a real estate agent when you handle these conversations properly. And when they've got intent, then all of a sudden they're talking to you about it if they feel you're delivering value to them and can help them. So spend a little time. I'd be spending 10 to 15 minutes a day educating about what's going on in the market, and then using all the tactics we talked about here. And I love that you guys are putting that case study out, because that's where a lot of agents, they tell me they don't know what to say. Right. I mean, I don't know if you're running into this, especially these folks that haven't sold a home in a down market. It's easy to just show up and, hey, this property's here, let's go buy it. Those days are over. And the days of only having 5 hot clients are over too. Your pipeline's got to be 20, 30, 40 people deep. And maybe you're getting 20% of those people to transact. I mean, that's what worked for me in the 2008 to 2012 window. I don't know. I mean, we've had this conversation off air. You got to have that huge pipeline. I think it's got to be gigantic.
When can you do another? We got to do another circle dialing, because I think this value-based follow-up that you're talking about, I know we were going to do FSBOs. That's a
tactical.
That's at a tactical appointment setting, and we'll probably get to that. But let us know in the comments, first off, you want us to go value-based circle dialing? I mean, I think we should get that like next week or the week after.
I'm in. Sign my mega deal with BAM. I'm ready to go.
That's
no
right.
Trade clause.
Everybody wish Tom congratulations. He has now officially signed as a BAM creator. This is the A-Rod coming into the clubhouse.
Bryce Harper.
The Bryce Harper. Yeah, you like Bryce Harper.
A-Rod beat the Phillies in a World Series, so it's a little rough.
Yeah. You didn't want to mention Jalen Hurts, even though he's going to get a big contract.
He's going to get paid. He played great. He wasn't the problem.
What did you think of that call in the Super Bowl? Because I haven't talked to you about it, actually.
The call, I mean, is what it is. The problem is they had a 10-point lead at halftime, and only one other team has given that up ever, and that was the Atlanta Falcons to that New England Patriots team. So it was there was a lot of reasons they lost that game. Jalen Hurts was not.
You didn't think the call was why they lost the game?
I mean, it contributed. I mean, it would have been nice if they would have gotten the ball back with a minute 50 left. But the fumble that Hurts had. I mean, that he talked about that. The defense couldn't stop anybody. I mean, the field was crappy that both teams had to play on. There was a lot of issues.
Was terrible.
I don't know how. I mean, you want to talk about not prepping properly? Like, how do you let that happen in a Super Bowl? I mean, there was. And it was both teams had to play on it. But, I mean, you literally see the Eagles' edge rushers who have to run on the side of their foot. And they're just like, looked like they were on a slip and slide. I mean, it was
so odd.
I don't know. I mean, you think they would the NFL could get this right. But no one's going to care. And, the NFL, they got a great business. They're just going to keep paying. So good for them.
Did you see that angle? NFL Films came out with a new angle yesterday of the call. And they showed him grabbing the jersey. Did you see that?
I've stopped watching sports for a couple days here, so it's been
okay.
I was at the office Monday. It was like it felt like someone had just gotten assassinated at like when Princess Diana died. Like, I mean, there was like 2 people here. It was very sad around here.
There's something wrong with people in Philadelphia.
I mean, they're passionate folks, and you know what? I like working with passionate people.
All right, brother. That was a good pod. You said I ran over you though. I don't know where
I was
did
more.
run
You
over
said that
you?
at the very first episode. You're like, "Hey, just interrupt me because I stomp all over people." It was more of a
Oh,
joke than
okay.
anything else. But that's why we do this. So I would say in the comments, like if you guys want to see more of this stuff and any like questions you have, I'd love to get some questions from the audience next time if they want to know kind of what's going on. I think that'd be a great thing if there's anything legit there. And we just got to keep the value coming, man. Because I mean, look how volatile this is. This is the most volatile market I've ever seen in 22 years.
Yeah, definitely let us know what questions you have. We can address. We can start doing some questions every week. I would love to do that. So put your question down below. We'll source them, and you can DM them to us if you're connected. But certainly put them in the comments on YouTube, and if that's easier for you. If you're listening, you can just send us a DM. We'll source the questions. We'll talk about them next week, and eventually we're gonna get our really good friend who we talk to a lot every single week. The three of us have these FaceTime audios. Lisa Chinati.
Yes.
We're gonna get her in here as well.
She's got some knowledge. Once her office gets squared away, I think she's got her hands full right now.
She filled in for Nicole on the Real Word Pod.
I saw that.
Week.
I watched it. You might think I don't watch this stuff. I watched the Man Product. That was good.
And it performed really well. In the comments, people liked Lisa. So we're gonna get Lisa over here.
That's usually not the
Maybe
norm, by the way. Usually it's the other way around with Lisa. They think she's a cold bitch. So
oh, I'm clipping that out.
I've quoted that to her face. That's no problem. So.
All right, appreciate you, brother. Good show. We'll see everybody next Friday on the pod.
Get your knowledge.
Let's go get some more knowledge.